Welcome to Theo Trade. This is Don Kaufman. It's August 14th, 2017, doing the Theo Night video. First and foremost, it's a Monday. We saw a ripping rally back. I mean, where did our volatility go as the volatility kind of gets sucked out of the marketplace? The VIX down about $3 today, which is, well, 20%. But let's start this evening by looking at the movement in the SPX in accordance with expected move. So the week, was expecting just over a $40 move, and that's denoted by the option prices. And one of the things, if you can't remember the expected move, or for instance, you don't have these lines drawn on your screen, you can always go over, it's on Thinkorswim in the Analyze tab. You can go over here to Think Back, and, well, you can look back at previous days' data. And one of the things I often do is I will look at this just to remind everybody, again, if you didn't write it down or nothing like that, here, the expected move for the week was about $41.75. Now, the reason I'm bringing up the expected move is because if we continue the rally at all, like on Tuesday, you may have a kind of a short entry point over here, right around about 24.82, 24.83. That should kind of cap the upside momentum for the week. However, you have to respect the fact that that's pretty much at all-time highs inside of the SPX. But hey, listen, that's where the expected move could carry us this week. So two things I want to show. Number one, right at that number there, which would carry us right into like an all-time high, again, it's the edge of the expected move. You can short the edge of the expected move. Number two, I want to show you how much volatility really collapsed today because, again, and I'll tighten up the number of options you got on the chain over here. If you took a look, again, over the weekend, it's denoting, again, and show this over here, about a $41 expected move. All of a sudden, you look, today, it's actually collapsed down to about a $25 expected move. And that's what happens when volatility kind of expands and then ultimately contracts back down. It contracts the expected move. Not to mention, we also passed through a full trading session. Now, the SPX expected move is one thing. It's the NASDAQ, though, that on a percentage basis had the largest move. So the Qs are up 1.3% in today's trading session. How does that compare to its expected move? Now, the Qs are known to actually crest through their expected move substantially more. I would not, and I would actually not short the 145 area inside of the Qs because, again, the NASDAQ has been known to be, well, Mr. Toad's wild ride. Speaking of the NASDAQ, let's go to the NASDAQ futures here for just a moment and zoom into the NASDAQ futures as, once again, you have to look at this. We're right back into the 5,900. And one of the things, not a lot of people probably see this or look at it in this time frame, but I suggest this is a 30-day 1 hour of the NASDAQ futures. And you can see where the NASDAQ futures are currently trading. They're right back to the happy place, which is roughly 5,900. Again, neither here nor there. It's like the risk from last week literally abated overnight. However, there's a few things that you want to keep your eye on. Let's cruise right down to it. I have been keying into the financials substantially day in and day out last week. In fact, one of the topics last week on the Theo Nights videos is, obviously watch the financials because the financials, first of all, they had a key reversal. They faded hard. This is a bit of a bounce. It's the first bounce that we've really seen inside of the financials. The question for the remainder of this week is a very straightforward one. Do the financials come back off? Okay. They're right at this inflection point of 25. And again, you can look back for quite some time and you can see the inflection point here of about $25, which that was a reactionary high back, all the way from March. Okay, we hit it again, reversed off 25. We shot through 25, came down hard. Here we are sitting at $25 once again. The key to this week, okay, I know everybody wants to look at, the big name tech. They want to look at the, the Facebook, the Apples, the Microsofts, the Googles, the Amazon, okay? But that's not what's driving the S&P 500. Sure, those stocks can help the S&P 500. It's the financials that are ultimately in the driver's seat. The financials did almost 1.4% today. The key point to be made over here is this going to be shorted into? There's a lot of discussion, okay, about financials and how in the previous quarter, many of the hedge funds have started to lighten up their positions. Interestingly enough, both in financials and in some of the key technology area, that a lot of that information came out after the close, ultimately today. Keep eyes on the financials. Again, I still carry a short position in the XLF. It's a little bit of a longer duration short position. If you're thinking of establishing a short position, try to do it, well, in a day like today when we were up. If we rally a bit more in the XLF, okay, I think you can enter into a nice short position. How to actually create ultimately those short positions inside of a product like the XLF, okay, don't hesitate to go out some 32 days. If you just want like a quick, easy, not so, like a large trade, if you will. When I say a quick, easy kind of fix over here, you can go out and you can make a nice defined risk spread that can survive, okay, and withstand really any storm over there. And the kind of trade I'm talking about, even if you want to go out as much as like 39 days, you can use something like an in-out spread. Again, we're trading right around $25. The in-out spread, just surround, okay, ultimately surround the option over there. And here's a 26-24 spread for 94-cent debit. Now, this is a defined risk position. You pretty much risk a buck to be able to make a buck in this particular trade. I'm going to delete that one out for just a second because I also want to bring up the fact that if you take a look at the options and even go 67 days out, if you wanted to create a short position in something like the XLF, I'm going to bring up delta. Okay, delta is the rate of change of the option for every dollar increment move in the stock. Okay, delta is also relatively associated with probability. But if you wanted to create a longer duration, or what I term a synthetic short stock position in something like the XLF, you could use like an 85 delta option. Okay, all you have to do is buy an 85 delta put. The reason I mention this is some people want to establish a position that doesn't have, okay, a defined profitability, if you will. Here, just going out and buying an in the money put, there's very limited time value to this put. Listen, the underlying is trading right around 25. We're purchasing a 27 put. Okay, with the bid offer spread in here, you could probably trade this for somewhere around $2.08. Okay, so there's extremely limited what we term extrinsic value. In fact, you can even pull that up. It's called extrinsic value. There's only 14 cents of extrinsic value. What's extrinsic value? It's the time value in the option. So this creates a synthetic short. And what does that really mean, synthetic short? It's like shorting the stock without, first of all, having to short a $25 stock and tying up the margin. And you get to short the stock with no more than about $2 at risk. And if you think about this, if the XLF rallies up massively over here, the most you could possibly lose is $2.08 in the next 67 days. If it sells off, I mean, think about it. If the XLF sold off all the way down to, for instance, 20, okay, nice. It's a good risk-reward trade, and it can be done inside of a tax-deferred account. And again, it doesn't limit your profit potential. Well, at least to the point where XLF ultimately can go to zero. One other point I want to make on this evening's video here is if you take a look at the kind of the masters of technology, if you will, Microsoft pops back up not too far from an all-time high. Okay, Facebook in a similar stance, not too far from an all-time high. Apple, okay, right, just right on the cusp, if you will, of an all-time high inside of Apple over here. Google, okay, and Amazon are really the odd stocks out. Now, I want to again key into both Amazon and Google, which have ultimately seen some pretty strong sell-side activity, and technology over here doesn't really seem to be holding the keys again to the market. So it's one of the facts that I think a lot of people are missing because they're still talking about it's the FANG stocks this and the FANG stocks that. Well, ultimately you have two of your major market caps that are in descent at this point. And it's one of the reasons why the financials are so critically important, okay, to the livelihood, if you will, of the S&P futures. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.